Let's take a look back at last week's plays and break down exactly what we played, why we played it, and how we played it. Now, if you look at the bottom of the screen, you'll see the recent plays for the week. The first one you're going to see is Six Flags shares. Now, full disclosure, this is actually shares that we held from the previous week, but since it's a current play, we're going to deep dive into it. Now, why would we be playing Six Flags shares, especially after them coming off of earnings where they lost almost 15% value in the shares? Well, if you look back historically, especially over the last year, you'll notice that Six Flags actually drops incredibly almost every single earnings. It's almost something that is guaranteed. So if you take a look, and we're going to look back at the same quarter last year, you're going to see that right on earnings, Six Flags actually dropped 17%. Followed by the next earnings where we saw a similar drop here of 18%. Now, we did have one earnings here in April of this past year where it was a much slighter drop, but the pattern seems to continue. But another pattern that always tends to rear its ugly head when looking at Six Flags is that from earnings until the time that they announce their dividends, there is a buy-up. Now that buy-up can range from 5 to 10 to 20%, but it's almost like clockwork. And in this case, we're playing a trend. Now, there's something I say in my channel all the time, and that's that a trend is a trend until it's no longer a trend. Well, what we've seen over the past several quarters is that this has continued to happen. We have seen runs, in this case, from as much as 19% in 41 days. On this dividend earnings, it was actually sandwiched in, so it doesn't really count. But we'll look back here. From 23rd of April, okay, until the dividend date, we saw a run of about 5.8%. Now, if we look at the last quarter, we saw nearly the same thing as we did 2 quarters previously, and that's that from earnings to the dividend date, we actually saw a 19% return in 42 days once again. So in this case, we're actually playing the same trend as we've seen previously happen. Unfortunately, this time, we actually saw that there was a little bit more of a sell-off after earnings than we anticipated. But we still were able to average in at a decent dollar amount. Now, if you were able to get in at the bottom this time, actually it was 41.48 this time, we've actually seen an increase of 9% in just the last 10 days. So unfortunately for me, I got in a little bit early, but we are profitable now. So that is actually a play that we still have open, but it was a play throughout the week. Now let's look into the second play. Starting on Monday, we played betting against WWE. Now, depending on how you play stocks, you can either be shorting this, or what I'm doing in this case is playing an options contract, which was a put on it. Now, why did I get into WWE? Well, let's bring up the chart. WWE, much like Six Flags, had abysmal earnings. Outlook, forecast, everything was just not what an investor wants to see. So we actually saw this stock drop from the day before to the following morning, 15%, and a continued slide throughout the day. Well, come Monday, we did see a 7% increase in the share on news of a partnership with Saudi Arabia. Well, why is this something that I decided to bet against? Well, this was actually an event that was known about and mostly priced in. So what I like to call this unexpected pop, or expected pop, depending on how you look at it, is a overreaction. An overreaction to news that was already priced in. So anybody who bought into this at the time was buying into hype that was already known about, or someone or some group that is trying to make a quick profit. I was able to identify this and make what was called a put here near the top a couple days later and ride it down for about 2 days. So if we got in on the 5th and we actually played this, well, if we can just pull this up here. Okay, we actually played this from the 5th. Whoops. All right. We actually saw a decrease in shares of 4.67%. So if you were shorting this stock, you would have made about a 4.67% profit when you sold those shares back. Or in our case, we took an option and we were able to get in at $250 for the contract and sell 2 days later for $320 per contract. Now, is that a home run? No, but that was a very methodical play that we played on speculation. Now, I do continue to expect that this will probably continue to slide because we are looking at the WWE introducing the XFL, which is another video in itself. So let's work our way up. Now, you're going to see 2 SPY plays. Both of these were shorts or puts in this case with the market, with the options trading. On both days, one was on the day of the 5th and one was on the day of the 7th. I played 2 shorts on those. And now, why was I playing shorts on those? So, if you look at the day of the 5th, we did see a very low volume day, which we've come to see now that we're close to all-time highs. But it became very choppy, and we got in a very ugly wedge formation. Now, I can identify that wedge formation right here, if I take a look here on the 5th, and this is basically a down wedge formation that we're seeing, okay? We're seeing that this is coming off of the day with a lower high and a pretty bottomed out, but a little bit higher of a low there. Now, we did see a quick buy up here midday, about lunchtime, but that was also a low volume buy up. We saw a continued choppiness, which led me to believe that sitting at near an all-time high with a very low volume day and not a lot of movement from tech stocks, from consumer goods, that we were probably going to have people taking profits heading into the end of the day. And at that point, I decided to take what is called a put here, near the top, is probably a little bit lower, and ride that down. Now, I was able to sell that option about 20 minutes before close when we did see a huge sell-off. There was more profit to be made there, but I was very happy with the exit point, because one of the most important things when trading options, more so than stocks, is to not get greedy. Make sure you set yourself a strong out and, you know, respect that. Whether it's a strong out on a loss or a strong out on a win, respect what you set for yourself. So 2 days later on the 7th, we did see slightly similar same thing. Let me try that again. 2 days later on the 7th, we did see a slightly similar pattern, but actually this happened at open. So we pull up our chart and we look at the 7th here. We are seeing a very large buy up early morning, followed by a little bit of a choppy upswing and then a sell-off, and then a huge buy up, followed by an almost immediate sell-off. Now, what that's telling me when I'm looking at the market is that's not a confident buy-up. Now, that is spikes on news, a tweet, some kind of reaction within the market. But when you see a reaction like that, followed by an immediate sell-off, that's letting me know that it's not catching momentum. If we're not catching momentum, we're not having buyers. And if we don't have buyers, then, you know, we're looking for more sellers to move in. People have scared money, people have profits, they want to move out. So I continued to watch it slide sideways, followed by a dip, and then a very weak buy-up. At that point, I decided I am going to do a repeat of what I did 2 days prior, and that is to short the market with a day trade into the end of the day. Luckily, I got in a little early, but still at a great time, and I did see a huge sell-off here. Now, normally, at this point, when I see a huge sell-off towards the end of the day, that's where I take my exit. We're going to bust through the implied volatility. The value of those options is going to go up immensely. But once I saw a stagnation happen, we saw a little bit of a sideways movement followed by that quick little bump, I decided, okay, if we get above 308.50, I'm probably going to sell this for a profit. But we never saw that 308.50. We did see a continued sell-off. Now, we saw this plateau a little bit here, and then a drop going into the end of the day. So we did see a little bit of a little bit of buy-up. We didn't get past the 308.50, but we saw another sell-off going into the end of the day. Now, unfortunately for me, I wasn't able to catch the bottom, and it was a little bit more of a buy-up, but I did grab a nice profit. So if we look at the plays from 2 days prior, we did see that we were able to get it at $40 a contract and sell at $56. Now, on the 7th, we were actually able to get more because we did have those large drops, which popped the IV and increased the value of those contracts exponentially. So we were able to get it at 33 and sell at 61 per contract, almost a 100% return within the last half of the trading day. Now we're going to move on to the next one, which is Alibaba. Now, Alibaba is a play that we played several times over the course of the week. Starting from the previous Friday up until this past week, we did see a very similar pattern start to take place. Now, with Alibaba, I'm a big fan of Alibaba. I believe Alibaba is definitely over $190 share stock in for the immediate term, and over 200 moving forward, as long as we don't see a huge reversal on the China trade deal. Now, let's take a look at that pattern that we saw take shape. Now, it bottomed out about 174 on the 30th of October, and that's when we started to see this pattern take place. Now, we saw an initial bump here with an open buy up and then an immediate sell-off into the end of the day. Earnings took place, and we saw the same thing. An immediate buy up at open followed by a sell-off. Well, was that pattern going to continue? And we did see it. We saw a pop here, okay? Sell-off, pop it open, sell-off, pop it open, sell-off. That pattern did continue. Now, unfortunately, I was only able to get into it once during the week. I played it the previous Friday, as well as during the week this past week. I wanted to play it a few other times, but I have to respect the ins and the outs and respect the pattern. I want to see it last longer because, once again, a trend is only a trend until it's no longer a trend. Now, moving into the end of the week, we did see a plateau, followed by a sell-off this morning, and a buy up. Now, I believe that this will continue to increase in price as long as we do see the stability within the China trade deal, and more importantly, Alibaba's version, Singles Day, which is a version of a Black Friday, pumped out a $16 billion the first hour, followed by $30 million in the first day, pushing them way beyond what Amazon usually pushes in. Now, why is that important? Because we're showing a company that is continuing to grow at a very fast pace. And what does an investor want to be in? A company that's growing. There's other things that are very attractive about Alibaba, including their forecast and a secondary exchange that they're looking to move into in Hong Kong. But that is also for another video. Staying on the topic and the trend of BABA, that moves us into our last play of the week. And that was shares of MDB, of Mongol. Now, why did I get into these shares? Well, one of the most important things here is not only is this a somewhat underpriced stock in my opinion, but we're also looking at the biggest news of the week for them. Now, on a stock that was already beat up, they did announce the previous week, October 30th, the same day that we started seeing the Alibaba pattern, that they had worked on and signed a partnership with Alibaba. Now, when you have a stock like this that is low volume and can move quickly and volatilely on news, one of the things we're looking at here is, does this correlate with the movement of Alibaba? Now, initially on the news of the partnership, we did see a spike and then a quick sell-off. But then once we started seeing that same pattern with Alibaba start to move up, the correlation on an underbought stock that had so much upside potential was just ripe for the picking. So where was my entry on that? Well, if you look down at the plays at the bottom of the screen, you'll see that I was able to get in at 123.45. Now, there was a chance for me to get in earlier, but I wanted to see more of that stability. So we were able to get in at 123.45, okay? And we were able to sell at 127.75. So what does that put us at? 127.75. We got out a little bit early today. Well, near the top, actually. A very, very good out. And we were able to grab about 3.5% in just a couple days. So looking back on the week, everything was very methodical. We were reaching all-time highs. We did have a lot of earnings that were really important there. But it's all about finding the plays that you're most comfortable with. The plays that you feel are in your wheelhouse, and not chasing every play that's there. So far, including the Six Flags shares, we're looking at a 6-for-6 week. 6 plays, 6 wins. Could there have been more money made? Sure. Could we have gotten greedy and lost money? Absolutely. But it's not about how many plays you win. It's about how much you win in the plays you are in. And most importantly, getting out of the losers. So that's a look back at the week of November 4th. Make sure to follow the Twitch. We do have the link down below. We do live stream every day during the market from 9:30 a.m. to 4 p.m. on most days, Monday through Friday. We also have a free Discord call. We'll put the link to that as well. And come hang out with us. Come learn something. Come have fun. And as always, stay green. Pony boy.